Thank you so much, Case, and good afternoon, everybody, wherever you are here in the country. I appreciate all of you guys joining, and it's always a pleasure to be here and be able to share with you guys a little bit about national life and we have going on in what we can help you guys with your business. So today, what we're going to be focusing our attention on, like, as Case mentioned, is going to be a little bit of how do the IUL's products really, make you more comfortable with them to be able to sell them out there, and then also not only how to sell them, then kind of wrap that around as well as to what National Life Group has that is different than everybody else out there and make you successful with us. So as I gonna go ahead and enter the full training, I do wanna just mention to you all that we National Life Group are is still the number one leading IUL carrier in the industry. So you are going to see that as far as index universal life, which is of course what we're going to be focusing on today, is we are the leading company on whenever it comes to all of the business that you're seeing here on the life side of the equation. So last year, just to give you also a little bit of a idea as to what's happening with our business here at National Life. Last year, we ended up the year with an increase in business that was pretty significant. We went from doing a total of $350 million in 2020 to last year doing $440 million in business. So we had a great year last year, and I want to thank you, Next Vision and Case, and all of you guys for doing business with us. We wouldn't be where we are if it wasn't for you all, and we're very excited as to what this 2022 is going to be able to bring to the table as well. And so for those of you guys that have not been contracted with us yet, we look forward to helping and serving you and doing business with everything that you guys are doing out there. So then the last thing that I'll say about us, National Life, for those of you guys that are new with us, is going to be that you guys are going to see that as far as National Life Group, what makes us unique, we are remaining a mutual company. We have continued to be mutual since our inception in 1848, so 173 years strong, being a mutual company, and we continue to serve our customers in that manner. So we look forward to having you all join us, and if you haven't, and continue to grow with us. So a couple of things that I want to show you before I get into what we're going to talk about today that I think are going to be helpful to you guys. And then it's also that you guys are going to be able to work on your own out there as you guys are continuing to do business. What I want to show you is where you can basically own time.
Okay, babe.
Oh, one second here. It looks like we have some background noise. So I'm gonna go ahead and mute everybody for the time being. So if you have any questions, definitely unmute yourselves. But somewhere in here that I want to show you all where you can go and basically look at some of the things that we got going on as far as the company is concerned is going to be training for you guys that you guys can do on your own. So if you come here to the National Life Group website and go over here where it says training, I want to direct you to two different pages, and then you guys can further your knowledge about everything that we're talking about. The bottom one, which is a webinar calendar. A webinar calendar because we do trainings every day here at National Life Group that you guys can come in and attend at your basically, whenever you can. As you can see, for example, today at 3 Eastern, we did one that was specifically around our peak life, which is our large IUL product, and talking about large case cash accumulation solution. So you can see we do a specific topics, so you can look at what we're doing, and then also further your knowledge on different things. And as you can see in here, you're going to see, for example, tomorrow we're doing illustration about a kid policy case design. We have some trainings in Mandarin as well. We have some in Spanish. So you can come in here and take a look, and then, you know, kind of basically figure out which of these trainings you want to attend, and definitely help you in that knowledge when and sign up for them. And then the other place that I do want to point you to is here in the training, same thing. If you go right here to the learning library, you're going to see that we have in here about 50 different videos about different things. So for example, annuities, how to do annuities and different cases on that. Talk about specifically indexing and doing a deep dive into different things. You can look at Inforce illustrations, life insurance, how to do different designs with our IULs, executive bonuses, look at mortgage acceleration, for example, as a concept, talking about the gift of legacy. I mean, you can come in here and really take as much time as you want, because these are all pre-recorded webinars that you can come in here and again, learn on your own. And you guide everything from prospecting and sales techniques all the way to advanced case designs and everything else. So definitely come in here, take a look at what's available, and you will definitely find that you doing some of this is definitely going to help you further that knowledge and continue to grow in your career as a whole in the industry, and learn also on your own time. So with that being said, I'm going to go ahead and come back here to the beginning of our homepage. And you're going to see in here, then I'm going to come over here to where it says illustration. And here in illustrations, you are going to, then we're going to talk a little bit about, again, the flex products, the IUL products, and how do these products are working out there. So then you guys can look at then what, how to different, basically continue to sell IULs. And if you're already selling IULs, basically look at how you can increase some of that premium sales that you guys are already making out there. So as I come in here into the illustration software, if you guys have never seen it, this is your first time taking a look at it, you're going to see in here that we got a new illustration. To run a new illustration, you can look at cases that you have already saved, and then also you can take a look at what some unsaved case list you may have had that maybe you didn't save. And what the unsaved case list basically does is, if you're working on a training and you are looking in here and you're looking at illustration, and for whatever reason you exited that illustration, then the software is actually going to save that for you for 24 hours. So you don't have to redo it. It's going to be there available for you, and you can come back into it in any time in those 24 hours and not have to redo the work that you had already started, and that you guys can then go ahead and take advantage of. So that is a great place. Again, a nice little trick that we have in there for you guys, that again is, you know, always something that I think comes in handy, that you guys can, it's always good for you guys to know whenever you guys are taking a look at things. So if I come here to new illustration, under the new illustration, I'm going to come in here, doesn't matter the state, the products are going to look the same. So in here, what I do want to point you to, and want to make sure that everybody also understands, is that whenever you are into the software and you're looking at illustrations, or you're looking at sending applications over our way, you're going to see two products basically of the same product. The difference is going to be what we refer to as the writing company. And what do we mean by the writing company? The writing company is going to be basically under the umbrella of National Life. We have LSW, and NLB, which is National Life over Month. So as you see here, Flex Life, you have that it is LSW, and then you have a Flex Life that is NL, which stands for National Life. So both of these products are available for you guys to write. However, every product you're going to see that has both versions, but you're always going to utilize the one that says LSW. The NL version is the version that basically is out there for that follows New York regulations, which means that it also has the New York compensation rules. So therefore, you are not going to want to use that, as your commissions are going to be decreased significantly if you use that paper. So you're always going to be quoting what is our LSW and utilizing that. And if you look if we were to do a comparison of the two, you're going to see that the products actually is the exact same. So there is really no difference on either one of them except the commission. So if I come here to the Flex Life product, and now that I'm here in the Flex Life product, then I can do any type of illustration. So then, I come here, name of the client. I'm going to leave their date of birth and age as 45 years old. And then I'm going to come over here to the death benefit and funding. So here in death benefit and funding, I'm going to, you can take a look at a couple of different things to, basically help you sell bigger cases out there. What I like to take a look at really, and how are you going to drive, and how do I see most agents that are working with us, how is it that they drive those bigger sales? They drive those bigger sales by really focusing on the client and showing them how they're going to get income from the product in a way that really nothing else out there is going to do. So as you are talking to your clients, one rule of thumb that I will tell you that is great to utilize is that you're going to want your clients, you're going to tell them that, if you want to retire with X amount of money, which is going to be typically, whatever they're making. Nobody wants to think about retirement and taking basically a pay cut on their income. Everybody wants to think about retirement and retiring basically with the same amount of money that they were making. So if they want to get shoot for that, then you're going to want to tell, that they're looking at saving anywhere between 10 to 20% of their income. So you're going to set the stage of them to talk to them about, here's kind of basically what that's going to look like, 15 to 20% of your income. So most clients right away are not going to, of course, start saving that 15 to 20% of their income, as most people are not used to doing what? Saving really any kind of amount of money. Most people out there are living in a world where, they are not saving money almost at all whenever it comes to their retirement. So for you to start coming into there and tell them that that's what I need to start doing, that's going to take a little bit, but it's a great place to get them to start thinking. And that's whenever you start having them think, is whenever you're going to see better results about what is going to then drive the business over to you guys. And then, for them to start thinking about this as not just something that is an expense, but rather something that is going to be good for them long term. So if I look in here, you have the basically the way to maximize what the the cash value in the policy is going to be, but you can also do a target premium. So if I'm just looking at this at maximizing what that death benefit is going to be, and basically bringing that down, so then we can focus more on cash value. All you have to do is just come in here and click on minimum death benefit max cash value. And as I'm looking here at the minimum death benefit max cash value, I'm going to then come in here, put the monthly amount that they're going to be doing, whatever the premium amount is going to be. It's going to be in a specified amount. So I'm going to come in here and click on a specified amount. And let's just say that this 45-year-old is saying that they're going to save $500 a month. So this is a great way to, a point to start, just because I want to show you kind of like how that conversation really is going to go. So $500 a month. And what I want to show them is that they're going to be contributing to age 65. Again, I'm focusing more on this in what the retirement portion is going to be for them, meaning that yes, of course we're going to have a death benefit that is going to be attached to the policy, but I'm focusing on what tax-free retirement really is going to be for them. Those higher premium cases that Casey is referring to, they don't really come from many times from just a death benefit sale, right? A death benefit sale, yes, you can have those, but those are going to be, far and few in between. How many people are going to say, I want $5 million of coverage or something like that? This is more specifically, how you people out there are really thinking. Again, you're getting them to think about what their money is going to do that is going to be working for them in an environment that they can grow it and access it at some point in time in a tax favorable way. And that's exactly what we're going to be doing here. So how are we going to do this then? As far as the illustration, I am going to show them, of course, what that looks like contributing to age 65. And I choose age 65 because that's the average age of retirement out there. So I choosing age 65 for them to start contributing. So they're going to be putting in this money until age 65. And then I'm going to, after that, going to look at what we call in here in the distribution portion, a lifetime income benefit. We still have, of course, what is, you may have seen out there, your variable loans and your fixed loans. Now, at National Life, we actually have an additional option for your client, and that is going to be the lifetime income benefit. Now, I don't know how many of you guys are and have sold annuities or are very familiar with annuities. And what you're going to see is that whenever you are looking at what our lifetime income benefit rider does, what it does that is different than the rest of the options out there that are going to be to take that income as fixed or in the or as variable income is that if you choose this rider, we at National Life Group are going to guarantee the client that they're going to be able to get this money in a yearly basis for the rest of their life. Whenever you're using a fixed or a variable loan, they work great, they illustrate great, but the thing is that also you don't have that guarantee. Why? Because if the product, once they get to that age, is not performing with that illustration that we're looking at, that interest rate return in there, what you're going to see is that then eventually that income may drop off, right? So that is going to be a deterrent to really utilizing what some of this lifetime income is going to be. I'm sorry, but that variable or fixed loan. What this lifetime income is going to do, though, is that it's going to tell the client, no matter what happens, no matter if the product performs at that point in time, no matter if the product doesn't perform at that point in time, as a company, we're going to be guaranteeing this income to you for the rest of your life, no matter whether you live to age 80, 90, 100, 120. And that is the great thing that this rider does, that there is nothing like it really out there in the industry. We, again, are taking up on the risk as a company and guaranteeing this income to your clients. So if I put this lifetime income benefit rider then in here, and I come over here to the quick view, then you're going to see that then this $500 for this 45-year-old is buying him $276,000 of death benefit, right? So we're still, of course, everything is based on insurance. So you're still going to have that death benefit attached to whatever it is that you're doing for your client. So you have that in there, that of course, that's going to be the protection that they're getting from the product. Then what you're going to see next in here is that the client, is putting the money in there, the $6,000 a year, and you're going to put it in here until age 65. And then at age 66, then this product is going to spit out to the client 12,183 of
tax-free income for the rest of the client's life. So as you see here, it goes all the way to age 120. Now, as a client, how is it that many of our agents are having so much success explaining this to client, is that you're basically telling your client, in this case, Mr. and Miss Client, you are going to be paying here 6,000, and basically then the company, once you get here 20 years later, the company is going to basically double the amount that you've been putting into the policy. So in this illustration is 6,000. Now the company is paying you 12,000. Also, Mr. or Miss Client, this money that is coming out from the policy is coming out to you in a tax-free basis, meaning that whenever you get it, you're not going to have to report anything to the IRS, and it's always going to come to you tax-free. So it is a wonderful product and a wonderful illustration that is really solving what most people's concerns are out there, right? So people concerned are about running out of money. People's concerns are about interest rates going up, taxes going up, and all those things. And we are really hitting home with all of this. Now, how is it that then we can turn this into an even bigger sale? Is that my follow-up question to the client would be, Mr. or Mrs. Client, as you look at this, is 12,000 really what you want to retire with? Or what else are you doing for retirement, right? As I mentioned earlier, you want to be saving somewhere in that 10 to 20% range, depending again on how old you are. The sooner you start, the better or the lesser amount that you're going to have to put in there. The older you are, the more money that you're going to have to put in there. So you're putting it back on them, right? You're putting it back on them as they see what saving this $500 is going to do for them. So if they want to start to get to retirement, they're going to want to do what? They're going to want to start contributing more. They're going to say, well, what if I put $800? What does that get me? What if I put 1,000? What if I put it more? You're always going to be now opening up that basically way for you to have those conversations with your client, for them to then basically design their own product where you are again being giving them that solution. That one is giving them that death benefit in case anything happens. Two, at National Life Group, as many of you guys know, we have those living benefits in case anything happens. But Mr. and Ms. Client, if neither of those two things happen and you get to retirement, then you have waiting for you a tax-free income that the policy will pay you out, in this case of $12,183 for the rest of your life in a guaranteed basis. So as you see here, you're really putting it all, painting a picture to the client that is going to motivate them to do more things, and is going to also motivate them to also get more active in how much they are planning on contributing to a policy. It's a win for you guys as agents, and it's also a win for the clients as they're going to be saving more towards retirement. So if I come over here to the reports tab and I run the report, so now we're going to get to see a full illustration. You're going to see that we have spent here at National Life Group a lot of time into developing this illustration. And I'm going to come over here to page 2. In page 2 is really where we put most of that time and effort in basically developing what is going to be for you guys a selling tool where you can just come in here and basically tell your client everything that they're going to get in order to do what? In order to be able to explain the policy to them in an easy way that the client can and will understand it. So then I can come here onto page 2, and all these numbers are going to be what? Based on the illustration that we just ran for the client. So I can come in here and tell Mr. and Miss Client, you're going to start your policy, you're going to be paying $500 a month. You're going to be paying that to age 65, as we mentioned. If you pass away, you have a death benefit, $276,107 that will go to your beneficiaries. If whenever you get also to age 66, the lifetime income benefit rider is going to guarantee you $1,015 in a monthly basis for the rest of your life. So that's a little bit of that 12,000 that we're looking at in an annual basis. And then in here, if you were to receive income, for example, to age 80, that's 182,750 the policy would have paid you. So then you can show them in here in numbers what the actual numbers that they're getting are going to be. And then finally, Mr. and Ms. Client, this policy not only offers you a death benefit in case you pass away, but this policy also offers you protection in case you get sick along the way. So if you get, for example, a terminal illness and you have 2 years or less to live, that a doctor tells you that that's what's going to happen, then at age 66, this policy will give you a benefit of 180,305. If you get chronically ill, which is that you cannot perform 2 out of 6 activities daily living, so basically having you have a long-term care type of coverage inside the policy, this policy is going to give you $3,599 a month for a total of 50 months, 50. So then this policy also gives you that benefit. If you have a critical illness or critical injury, which is going to be if you have a heart attack, you have a stroke, you have a Lou Gehrig's disease, you have ALS, you get blindness, you get a major organ transplant, you have severe burns, you have a traumatic brain injury, coma, paralysis. There's 17 conditions that we cover under the critical illness and critical injury. And depending on how severe that condition is, meaning that you could have a heart attack, be up and walking tomorrow, minor heart attack, or you could have a heart attack and have quadruple bypass surgery, completely different end of the spectrum. Depending on how severe it is, the company will also give you a payout for those things. So as you see, Mr. and Ms. Client, you're going to have that protection for a death benefit. You're going to have that protection in case anything happens. And then you also, if none of those things happen, you get to look forward to having a nice supplement for your retirement that we're predicting is at 1,015 today. Now, if you want to get closer to what you're making today, obviously we can adjust those numbers either today or here in a year or two whenever you start freeing up more cash to put into these policies. So that is, to me, a wonderful conversation that you guys can have with your clients and really basically show them the whole benefit of a tax-free retirement in here and how you guys can also increase those premium sales, as now this is going to be more enticing to your clients to be putting more money away. So I'm going to pause right there for a second and see what questions, if any, you guys have so far about what I've talked about today.
I have one question. This is Angeline.
Yes, good afternoon.
Good afternoon. My question is, are the accelerated benefit riders, are they only paid out after age 66? Because what if someone starts at 45 and they become chronically ill at 55?
Great question. So this right here that you see, this age 66, that is just an example. So these benefits are available, the majority of them right away. So the terminal illness rider is going to be available day one of the policy. So right away, no matter which state you're in, if somebody gets terminally ill, the policy will pay out a benefit from there. In the chronic illness, depending on the state, is either available right away or is a 2-year wait. So it's one of the two. Now, to qualify for a chronic illness payout, the client has to not be able to do those 2 out of 6 activities daily living. And what's gonna happen is that they have to not be able to do them for 60 consecutive days. So, it's not that somebody wakes up one day and just, is sore from working out all day the day before and they can't do it. They have to have 60 consecutive days that they cannot do the 2 out of 6 activities they're living. And then on that next day, they can make that claim with us. And then on the critical illness and injury, that is available after 30 days that the client has the policy. So most of these benefits, like I said, are available right away. And then you can actually illustrate that. And what I'm going to show you is if I come back over here to the actual illustration software and come click here where it says riders, you can actually choose what ages do you want to show your client how much the payout would be for these different benefits.
Awesome. Thank you.
Great question. Of course, Angeline, great question. Awesome. Any other questions so far?
I have a question.
Yes, go ahead, Henry.
What happens when you change from A to B option? It's not available here?
Oh, it absolutely it is, right? So we do have that option to utilize increasing death benefit as opposed to level benefit, right? So if I come over here to the death benefit and funding part of the illustration, and in here, as you see, we have it as level, which means that the death benefit that we are seeing, the 276, remains the same for the life of the policy, basically, until it hits corridor and then can go up. What we can do is then even maximize that even further whenever you're doing a max accumulation sale and come here to increasing. So what's going to happen is that it's going to bring that death benefit to the absolute lowest. And based on a new regulation that changed at the beginning of last year, that actually goes down dramatically today. So meaning that your client can really stash up cash and buy little life insurance. So if I do that, you're going to see that the death benefit now drops down to 107, 159 to start, right? So if I come back here to the quick view, now the client basically, the death benefit is the initial base, which is 102,026, and they're going to also get included in their death benefit the accumulated value. So if you add up the 102 and the 5133 that you see right there, what you're going to get is this 107, 159. So then every year that death benefit is going to increase, and the increase is going to be, again, the same thing, your base death benefit plus whatever that accumulated value is on that year. And that's going to continue to grow. Now, what happens is that, you're going to get, again, same thing over here to age 65. You're going to have a little bit more death benefit at that point in time than what if you were to start it the other way. And then this would spit out a little bit more income to the client. So closer to 14,000 as opposed to 12,000. Now, what's the big difference on this? So then everybody also understands is that this one is providing less, of course, death benefit to your client. So if your client is worried more about that, having also correct protection, there's something to keep in mind. And then number two, though, the thing that gets brought down and that many agents is a surprise to them is that if you're doing this because the client is buying less death benefit with the same amount of premium, then your commissions are also going to be a little bit lower. So, I always like to mention that, yes, this is a great for depending on the client. Some clients this would be great for, some others maybe not. Depending on that, but then also be aware that the more you bring down that death benefit, the less your commissions are going to be. But great question, Henry. Thank you. But yes, so you have that available in here as well. Any other questions so far in what we've gone over so far today?
I have one.
Yes.
In this illustration, the accumulated value, that's the amount from which the income is going to be drawn. Is that correct?
So the income is going to be drawn from the surrender value, right? So the difference between the accumulated column and the surrender value column is that the accumulated value column is the actual value inside the policy. The surrender value takes into account if, for example, there is surrender charges. So any life insurance policy, IULs, they're going to have 10 years of surrender charges. So, some companies longer. I haven't seen any that has shorter than 10 years. So our actually is 10 years. So if you're looking here, the first year, your accumulated value inside the policy is 5,133. But if the client was to surrender the policy, we would actually charge them surrender charges. So the actual amount that they can access is 2,871. So although they have 5,133, they can only touch 2,871 based on, again, on that surrender charge. If you look at over here, though, after 10 years, so in year 11, that accumulated value is 74,662, and the surrender value is the exact same. Why? Because you no longer have any surrender charges in the policy. Now, as you start to take income, the way that the income comes out from the policy is via loans, right? So meaning that the client is going to be borrowing from the policy this cash, and that's how we are able to then keep the cash coming out tax-free. So as they're taking the money out, the accumulated value remains the same. Why? Because as you're seeing here, it doesn't drop down, but it's going to continue to grow because as you take the money out, the money is not coming out from the policy. In order for it to be a true loan, that money has to come from the carrier, in this case, National Life Group. So whenever a client is taking this, okay, in this case, it's 13,969, this doesn't come from the policy itself. It comes from National Life Group's pocket. National Life Group then in turn is going to do what? Charge the client an interest rate for that. But why do people do that out there? Is because the interest rate that the policy itself is getting is going to be typically, and what we've seen historically, higher than what the company, the carrier, is going to charge. So therefore, doing this transaction works for the best interest of the client. They're making some money on the money that they're borrowing, etc. And then also they're avoiding paying taxes because then the money is coming out in a loan basis. So as you're seeing here, the accumulated value continues to grow. But if the client decides to, let's say a year after 3 years of taking income, they say, okay, I got 3 years of income, but now I have an emergency, I want the rest of my money. Then what they will be able to get is a surrender value, which is going to be the accumulated value of 227 minus whatever they have lent out from us at National Life Group. And then we're going to give them the difference, which in this case is the 182. So this surrender column, then in the later years, when you're taking income, is taking into account already paying back whatever the client has utilized, which is why you see then start to decreasing here.
Okay, the question was more or less the income is coming from the surrender value, correct? Or the accumulated?
So it
It's
comes from
loan.
the, so it, when the income is always, you know, if you look at it in here, the surrender and the accumulated are the exact same. So the calculation is whenever we figure out how much we're going to pay, you can call it from either one of them because there's always going to be the same number here unless there is a loan outstanding. If there is a loan outstanding that the client have taken any other prior year, then your surrender value is going to be less than what your accumulated value. So therefore, if that's the case, then it always going to be based on that surrender value because that's the actual cash that the client could then withdraw if they were to take all it all out.
So in this illustration, the 199, that's the point at which the distributions take place or the loans. Is that 199, is that guaranteed?
So that 199 is not guaranteed, right? Because we are utilizing an index universal life product that is based on what the index that is utilized performs at. In this case, if I come in here and I show you, we're utilizing the Credit Suisse balance trends option. The Credit Suisse balance trends option, basically what it does is that it doesn't have the ups and downs. It's not as volatile as the S&P 500 is. And that's why we have created a balanced trending option in there to be utilized. And we see that actually that performs better right now in the current environment. If you look at the current environment out there, there's a lot of volatility in the S&P 500 and in those markets. So therefore, the gains are not going to be the same as if you were to utilize something that is not as volatile as that. However, this that we're using, as you see, we're assuming a 5.5% interest rate. Is the same interest rate that we're assuming for the illustration if you were to utilize the S&P 500 option. So the client or you guys have the option to utilize either one of these options, whether it's the S&P 500 option, whether it's a Credit Suisse option, or you can do a 50% on the S&P 500 or 50% on the Credit Suisse, or whatever percentage you want. But based on your question, to answer your question, that final 199 or whatever that cash value is going to be is going to depend on how the product performs up to that point in time. The 5.5 that you see right now, which is with a current cap that is hovering right around 8.5%, 8.75. What's going to happen with that is that it's going to change. I'll tell you that cap currently is the lowest that we've ever had it. But that's also because interest rates have been suppressed for a long time. And, you know, I won't get into a whole economics talk here, but that has driven down caps across the industry. As things start to shift and interest rates start to go up and things are not as volatile, then you're going to see rates go up. So then that rate that you're seeing in here, that illustrated rate also is also going to start to go up. So what you see right now is based on a 5.5% illustration. So if we were to average a 5.5, then yes, this 199 would be where it is. If we were to average higher, of course, this 199 will be higher. If for whatever reason that was to average lower, then this 199 will also be lower. So it is not guaranteed. Does that make sense?
Yes.
Perfect.
Can you
So-
hear me? This is Johnny
Yes.
Helm. You can hear
Yes.
me, okay. You know, the nice thing about an IUL is you get an annual report every year. And I always say, this is really the icing on the cake. You give the client, when you make the sale, an illustration. You keep a copy and you say, here's the good news. Every year, I'm going to call you. We're going to take a look to see if it actually hit these numbers. And then most of the years, they're going to hit them. And you got a real happy client. This is the time to get referrals. But let's say you go 3 or 4 years and the S&P 500 is not performing. You change it, okay? You got it? But I think this is the nicest thing about an IUL is the annual report. Are we okay? Can you guys hear me?
Yeah. No, I can hear you. I don't know if anybody else wanted to chime in, but yeah, no,
Yes.
I completely agree with you.
About the IUL.
Hey, Case, are we gonna get a copy of this recording?
Yes, we do. It's being recorded.
Awesome, thank you.
And what I will say also about, you know, now that we touch on that topic, just real quick, my final thoughts on that question would be one, this again, I make the point that we're illustrating this at 5.5%, but you know, in my opinion, again, although not guaranteed, we are showing that at a very much low interest rate. You know, so long term, that average will probably be higher. And what we're illustrating today is probably pretty conservative as to what actually is going to happen with the policy itself. National Life, one of the things that many agents have a great time with us is exactly what Johnny was mentioning, which is that every time you get that annual report, actually, if you compare it to what was illustrated, 99% of the time, it's actually going to be better than what you illustrated.
Absolutely.
And, you know, so that is a great conversation topic, as Johnny said, that it's going to increase for you what you're doing with your client. And many times clients are skeptical a little bit of what they're doing at first, but after seeing that, then that opens a door to all kinds of doors to referrals and increasing policies, et cetera, for long-term for your business. And then the last thing that I'll mention, the last thought on that is that.
Let me mention something right fast, okay? This illustration, when you get it and you compare it with any other IUL illustration, is absolutely the best to present. It is the best presentation from an illustration that I've seen, because it explains all the benefits, but especially the living benefits, better than any other illustration. And I love it. And I say, no matter what the difference is between illustrations, when you look at the National Life Group illustration versus any others, it is so easy to present. And especially when you start talking about the living benefits, and when you get into those, you've got one benefit that most of the others don't have, and it's that accident benefit. But anyway, I think this is a beautiful presentation. I'm sorry. Go ahead.
Oh, no, you're good. Thank you. And so then the only other thing that I was going to add to that, as I was mentioning, my last thought on that is the only thing that could make an index product not work is the carrier itself, which is why, whether this is the first time that you heard me speak or the 10th time or 20th time that you heard me do a presentation for you guys, you always hear me talk a little bit about National Life Group at first, because the company itself really matters a lot as well in this, because all of these components, everything that makes an IUL product work, were great. And the only thing that could derail that is a carrier changing what the caps are, changing what the cost of insurance are, and different things inside the product. And I'm happy to tell you guys that in 173 years that we've been in business, we have actually never raised cost of insurance in any of our existing products. And that goes to show you guys that as a company, National Life Group has always had the thought of long-term for clients, and everything that we build is with the thought of being around and providing the best for our client, and then of course also being part of a mutual company. So just something else to keep in mind whenever you're looking at all these things, and whenever, of course, you are getting into understanding all the ins and outs of an IUL product, as we're talking about today. Awesome. Any other questions so far? I mean, we have kind of like touched on a lot of different good points here on an IUL product, different things that make it tick, different things for us. And we have roughly about 4 minutes left in our time allotted today. So any other questions that I can answer for you guys today before we close it out for the day?
Hey, Daniel.
Okay, just to, sorry about that.
Go ahead. Go ahead.
Just to confirm on this one, your accumulated value, right? It's the product in itself is a recognitionable funding that people can pull out, and it'll still accumulate, right?
Correct. Yes. So what you can pull out is based on the surrender value, but what's growing based on the index that you have is going to be your total accumulated value. Great. Henry, you had a question as well?
Yes, quickly, can you change it to option A to see if the charges and everything change, the 199?
Yep. So what you should see is that by changing that, there should be a little bit less of an accumulation. So as you see here is 174, right? Okay. So, and again, what the big difference is going to be that this, although they have less cash value, they were protected also for more time, right? As opposed to starting at 100,000, they've had 276,000 from the beginning.
Got it.
Yeah. Awesome. Very good. Any further questions, anybody? Awesome. Well, if we don't have any further questions, I think that this is a great place to start for many of you, a great intro to also who National Life Group is for many of you. I will tell you, as far as business, whenever you submit our way, the last thing that I will tell you is that we are processing our business about 50 to 60% with an instant approval. We do non-med about 95% of our business today, up to $3 million of permanent coverage up to age 50, up to 1 million between 51 and 60, and 61 to 65, up to 250,000. And you have, of course, access to myself as you need to. Case knows where to find me. So if there is any other questions or any other things that we can help you with, please definitely let us know. We'll be more than happy to help, and I look forward to doing one of these with you again in the near future. So, Case, I'll turn it back over to you, but thank you everybody for being here today.
All right. Thank
Thanks
you
for a
very
great
much, Daniel.
session.
That was great. That was great.
Thank you.
Thank you very much. Okay, guys, any other questions, let me know, or reach out to Johnny, and we'll be able to help you as well. Other than that, if you need National Life Group's contract, let us know. We'll send it to you or request it through your Assurance Bay account, and we'll process it right away and make sure you get contracted with them and start writing business. So thank you very much, guys.
Presentation you're gonna make. It is so beautiful.
Thank you. Thanks, Johnny.
Thank you so much.
All right, Johnny, you convinced me to go back to NLG.
All right.
I like the sound of that. Have a great day, everyone.
All right.
Thank
you.
you.
Hey,